Hi, Chris Duff over at Serious Land Capital, vacant land funding partner update on the market as well as our own internal decision making here, and I think should be pretty informative for your own businesses in terms of risk allocation, especially. So, obviously, a lot going on in the markets and back and forth, and who knows where things are going to be going even over the coming days, weeks. I don't know. There is some more firm data from some of the largest financial institutions in the world. Earlier today, one of my core partners at Serious Land Capital works at $200 billion AUM hedge fund, and they pause all deals in their pipeline, like over $10 billion worth, and kind of gave the internal memo, like prepare to be smaller for a while here. They're expecting their fundraising to be reduced by upwards of a third throughout the remaining part of this year. And, inevitably, the decisions made by these, multi-billion dollar, $100 million firms that, or these senior lenders and LPs are kind of bailing out on deals or just pulling back significantly already. That all will trickle down to some of the, smaller deals or even medium-sized deals that, the rest of us might be working in. So really important to keep that in mind here. And, we're updating our own decision-making within our company as well to be even that much more rigorous about deals that we are reviewing. We have that larger 50-acre Texas deal I know I've remarked on for quite a while that is under contract as of last week to sell for $863,000. I talked to the broker today. They said they're still on board, fast tracking it to understand whether, they have a very high likelihood of moving forward or not within the next 30 days. We should know a lot more. And if it does pass that threshold, it's probably like an 85% likelihood they'll actually close. You never know until the money is in the bank. I mean, these guys seem extremely serious. They've done a lot in the area before. So, that is like a massive piece that would reset our cash position in a really substantial way that we're going to be holding our breath for our own business here. And then obviously we have that other larger Louisiana subdivide that is currently in process. I talked to that broker as well too. Him chatting with other brokers in the area, they think that we're sitting on, perhaps the most prime piece of land in the entire parish. So, I mean, that's good to hear from our side as far as having a quality asset. So, if we are entering into a much trickier market, it's good to know that our large ones, our two largest ones are, probably our absolute best kind of prized assets. So, those are the ones that we really need to perform well here. In the meantime, we have three other assets that are in our pipeline and have, one especially has been in there for months. It's just had a ton of title issues and is a bit more expensive. It's like a little north of $100K purchase that I still feel very good about, but we're trying to delay purchasing that one off just for some other anticipated sales to happen earlier, so we don't have to inject more capital. Again, we're just, we're de-risking here. So we still are going to plan to move forward with those ones based on the underwriting that we've done. But pretty much everything else that comes to us, anything north of 100K purchase at the moment, especially pending some of these other larger assets moving, is going to be very unlikely to be funded outside of like absolute screamers of deals. And even for the sub-K purchases, like if it's not a conservative X or more, we're not going to do it. And, previously we've been more creative with terms. Sometimes if the margin was a bit more questionable, we might be able to adjust profit splits or have kind of a preferred return on our side to de-risk the property a little bit, or at least preserve some of the upside that we could get for the property. Now that's just out the window for the time being. We're and we need to make sure, hey, that our cash position continues to be strong and we can ride out the pain for, an indefinite period of time. Who knows how long this could last, and be able to cherry pick more distressed assets as they inevitably show up. So just to update you all as far as, our current decision making in light of rapidly changing events, as well as decision making from some of the smartest minds and largest capital managers in the entire world. So we're keeping, and we have like inside info in terms of what is going on there. So it's something really key to keep in mind here. Obviously, like, this is never fun. Some people are always like, yeah, I can't wait for more recessionary period, or you can pick out better assets. Like when you're in a risk off position, when you have to hunker down and be more choosy like that, that's definitely not as fun. Like I would love to just keep rolling and rolling, turning over capital, more and more deals, versus, being even that much more cautious. Already we were a cautious company, investing like maybe 1 out of every 50 deals coming to us. Now it might be like 1 out of 100, or possibly even less, with increased scrutiny from an underwriting perspective. You can probably hear it in my voice, but like, it's just, it's not, no one likes dealing with that uncertainty. And there might be some like crazy opportunities in the future, or even over the coming months, that could just be like absolutely killer deals. But, being in a de-risked, risk off position, like, I don't know who prefers operating in markets like this. Not if you're a real entrepreneur, you want things to keep rolling and let the optimism be flowing. I mean, we're still very optimistic for the future of this business and so forth, but again, we want to be doing this for years and decades to come here, so you have to be that much more careful not to over lever yourself and get caught in a bind from rapidly changing market dynamics and assets that might have performed even a month ago, a couple months ago, that might be just that much more riskier and tighter on margin, currently and going forward here. But, these things could rapidly change back in the other direction. We assess our business on a week by week basis, sometimes even a day by day basis. That's currently where we're at, and, really assessing what's coming in and out, being that much more strategic from our side on how we're timing up closes and so forth here. But that's just smart management. If you really want to be operating in multiple different environments, you just have to get used to different markets. We started our land business kind of end of 2019, right at the start of COVID, right around that area, like when the markets were crashing hard in March 2020. So now here we are 5 years later, almost to the day, where things are happening like that again. This one might be longer term, who knows, because who's really counting on like that instant kind of liquidity injection that we got from COVID? I don't know if that's a repeatable circumstance here, that kind of produced a bull run real quickly after a massive crash. So that seems less likely, if I were to guess at this point, but who knows? Stranger things have happened. But we got through tough markets then. Even in shorter term, there was kind of big bull runs 2020 through mid 2022, and then it became massive inflation, high interest rate environment. Got a lot harder after that. We navigated and survived through that. And now here we are in yet another market shift. We even had like a mini bull run in, November through January of this year. And then, things started to get a lot harder once again. So You just have to be able to navigate and adjust your risk and your underwriting depending on the market. And, you have to know how to be both a peacetime leader as well as a wartime leader. Now we're heading, this is wartime that we have to navigate. You have to be much harsher with the decision making, be that much more careful with any expenditures going out. We're reducing our advertising spend, like pulling back on podcast ads and so forth. And as we, again, kind of really hunker down and make sure we're aligning our long-term interests with the ongoing health and cash positions within our company, particularly, again, in light of some massive properties that we had bought fairly recently that we're anticipating very strong exits from, and then we can reconsider going forward from that side, besides like continuing to inject more and more cash into the business, which we have, but that gets dangerous really quickly here in a changing environment. Hopefully this is helpful for you as you make your own decisions going forward here. This is where the resilient will survive. I have a feeling this is going to be like the trickiest part of land over the last 5 years, even more so than like late 2022 or late 2023. Markets really started to change and so forth. This kind of has a different feel to it. It could be much longer term with what's going on. I hope I'm wrong. I hope it's more of a blip and we can all get back to just cutting deals and moving forward here. That's when. But we are preparing for the opposite, and we'll update accordingly. So let me know if you have any other thoughts in the comments, DMs, emails, whatever. If you are looking for funding and you do think you have one of those special deals that we'll still consider, seriousland.capital. We're not going anywhere. We're just going to be that much tighter with our review process. Land Daily Diligence Facebook group. Just got off reviewing some deals on that as well. And also remember, April 17th, Dave Dennison and I, likely Justin Sleva, will be coaching other land investors within hot seat sessions. That starts at 1:30 Central Time next Thursday. So if you're interested in joining that, be sure to either comment on this or hop into my Facebook group and mention that you want a hot seat. We will get to as many of you as we can here. Those hot seats helped grow our business to where it is today, probably more than anything else. So highly encourage you to take advantage of that. That's totally zero cost as well. Landpricer.ai, I know I commented on that over the weekend, actively improving that product, all in the background here. Got to keep moving forward. Can't bury your head in the sand, can't throw up your arms and just whine about the problems of the economy and just wait for things to change. You got to take action where you can and adjust accordingly. So with that, subscribe and share. All my best. Talk to you next time. Bye.